Hello everyone and welcome to this episode. Today, we're turning our attention from Earth's markets to the vast expanse of the starry sky. Space has long been a battleground for nations and superpowers. But now, a new gold rush is underway, starring publicly traded companies attempting to turn science fiction into reality. Investing in space is like a 15th century navigator preparing to set sail. The horizon could be a new land of gold or a turbulent, all-consuming sea. This sector is teeming with disruptive visionaries, but also rife with traps that can wipe out investors. Today, we'll play the role of interstellar navigator and chart an investment landscape for the U.S. satellite sector. First, we must understand that not all planet companies in this galaxy are created equal. They can be roughly divided into several categories. The first category is the dreamers. They are the brightest and most dangerous celestial bodies in the universe. They don't sell today's products, but rather a grand dream that could change the world. Their stock prices can explode like a supernova or plummet like a meteor. Today, we're featuring two such dream chasers, ASTS SpaceMobile and Intuitive Machines. The second category is the builders, the shovels and jeans vendors of the interstellar gold rush, providing the infrastructure for all dream chasers. Their businesses are more solid, but their valuations are equally high. Rocket Lab, recently hyped by the market, is a prime example. The third category is the data miners. These companies already own assets in orbit, much like the data miners in the asteroid belt, transforming space information into tangible revenue. This group includes Planet Labs, Spire Global, and two more established veterans, Iridium and Globalstar. Today, our first stop is a visit to two of the most eye-catching new stars, the twin dream chasers. The first star, ASTS SpaceMobile, ticker symbol ASTS, a cell phone tower in the sky. Imagine standing anywhere in the world, whether in the heart of the Sahara Desert or a small boat on the Pacific Ocean, and being able to whip out your ordinary smartphone and make smooth video calls with full signal. No special satellite phone, no bulky receiver, just the phone in your pocket. This is the dream ASTS SpaceMobile is sharing with the world. Simply put, its core business is to build a space base station, comprised of giant satellites in low Earth orbit, providing direct broadband connections to billions of ordinary mobile phones on Earth. If successful, this will completely eliminate signal dead zones on Earth. You might ask, what's the difference between this and Starlink? The difference is that its technology is more advanced. Let's first examine its core competitiveness. Its defense is the disruptive technology itself. Currently, both Elon Musk's Starlink and other satellite networks require specialized ground-based receiving equipment. ASTS SpaceMobile is the only company dedicated to enabling ordinary mobile phones to connect directly to satellites. Once this technology matures and is commercially available on a large scale, the market potential is immeasurable. This is what makes it even more imaginative than Starlink. Let's look at its business growth and financial performance. Speaking of growth, ASTS's stock price itself is legendary. From its low in April 2025 to July, its stock price soared over 211% in just 3 months, pushing its market capitalization to a staggering $20 billion. However, when we look at its financial reports, we see a different picture. In the first quarter of 2025, the company's revenue was a mere $718,000, while its net loss was a staggering $45.7 million. This is a classic story-driven stock. Its stock price is completely disconnected from its current financials. Investors are buying into its future, not its present. The good news is that the company isn't short of cash. As of the end of last quarter, it had over $870 million in cash, providing ample ammunition for it to burn cash to fulfill its dreams. This yawning gap between reality and future prospects forces investors to view this company with caution. ASTS's valuation is dizzyingly high. With virtually no revenue at scale, its market capitalization exceeds that of many established telecom companies. This means its stock price is already pricing in years of future success. Therefore, from this perspective, the risk is extremely high. We can view it as a make-or-break bet. Either it successfully deploys its constellation network and begins full commercial operations as planned in early 2026, becoming a global communications giant and seeing its stock price multiply several times over. Or it encounters any major setbacks in technology, launch, regulation, or funding, preventing commercialization, and its nearly $20 billion market capitalization could be wiped out. Its success depends entirely on its execution over the next 18 to 24 months. From a safety margin perspective, this is pure, high-risk speculation. It's suitable for investors willing to invest a small amount of capital for a world-changing return and prepared to lose everything. Let's look at the second star. Intuitive Machines, LUNR, the FedEx of the Moon. Leaving low Earth orbit, our next stop is the Moon. Here, we encounter another dream chaser, Intuitive Machines. If ASTS aims to connect the Earth, LUNR's ambition is to connect the Earth to the Moon. Its business model can be understood as lunar space as a service. Imagine, in the future, humans want to establish a base and mine resources on the Moon. Who will be responsible for transporting the equipment? Who will provide the communications and data networks? LUNR aims to be that answer. Its business is divided into three main areas: lunar transportation services, lunar data transmission services, and lunar infrastructure services. Simply put, it wants to be the FedEx and AT&T of the Moon. This sounds a bit far-fetched, like it's painting a pie in the sky for the Moon. So does this company have the capabilities? What are its core competitive advantages? LUNR's greatest advantage lies in its deep ties with NASA and its first-mover advantage. It is a core contractor for NASA's Commercial Lunar Payload Services, CLPS, program. In 2024 and 2025, it successfully landed landers on the Moon twice, returning the United States to the lunar surface after more than 50 years. Although both landings ended in rollovers, this demonstrated its rare ability to deliver payloads to the Moon. Let's examine its business growth and financials. Unlike ASTS, LUNR already has substantial revenue and a clear growth path. The company projects full-year revenue of between $250 million and $300 million in 2025. More importantly, it has a clear timeline for profitability, projecting positive adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, by the end of 2025 and full-year profitability in 2026. In terms of valuation risk, LUNR's valuation is much more grounded than ASTS's. Its market capitalization is approximately $2 billion, and its enterprise value is less than $1 billion. Based on its projected 2026 sales and adjusted EBITDA, its valuation multiples are 2x and 23x, respectively. This is quite reasonable for a company at the forefront of space exploration. Of course, the company's stock remains highly risky. The core risk lies in execution. Will future landing missions be a flawless success? Can it complete its NASA contract on time? Furthermore, due to its narrow customer base, it is highly dependent on government contracts, and any changes in NASA's budget could have a significant impact on its business. The above information tells us that it has a certain safety margin, but it's quite low. This safety margin comes from existing contracts with NASA and a large project pipeline. This provides the company with a fundamental value foundation, something that the purely dream-driven ASTS lacks. Friends, we've just visited two of the most exciting, yet also most volatile planets in the satellite galaxy. ASTS and LUNR represent two different styles of dream chasers. ASTS is an all-or-nothing bet on a potentially revolutionary technology that could change the world. LUNR, on the other hand, is more of a high-risk infrastructure project, betting on the grand narrative of humanity returning to the Moon. The storytelling of these companies far outweighs their financial value. For rational investors, it's best to avoid them. If you're looking to take a chance, you can allocate some satellite positions to these two high-risk satellite companies. Not too large a percentage, but in the event of success, the returns could be staggering. So, are there any more stable investment options in the US satellite sector? In the next installment, we'll visit the builders and data miners who pave the way for these dreamers and see if they can provide us with a safer interstellar route. Okay, that's all for now. We'll continue next time.